Alright, what's up? Okay, so I'm in a short term scalp here. I'm up 3 points now, so that's pretty cool. But I'm just using a dollar in correlation, with the ES like I've been doing. This past week it's been working pretty good. I think I'm seeing a low time frame buy model, right? With like this consolidation here, down reaccumulation, smart money reversal. This green line was into a bullish OB on the 15-minute. And now we're in the distribution phase, so we should run above these highs or at least into these gaps, right? Because you don't have to hit your target to be profitable. Like there's other things you can look at for price to hit if you want it to run away. So that's really what I'm looking at, but profit is locked in. So now we'll see if it runs to my target. Yeah, if it stops me out, that's cool. If it doesn't, that's also cool. But okay, since my stop's protected, I could just go to the dollar and show you what I was seeing to give me confidence to take that scalp. So on the 1 hour, right, we have this gap, right, this fair value gap from this candle's low to this high. There's a gap, right? And we already cleared buy side liquidity. We ran I think it's like an hourly high or something way over here, right? Because the dollar, we've been seeing the dollar going higher. But we finally hit something, and I was like, okay, we hit that, and we have some form of gap to retrace to. So now basically, right, the if y'all saw the Instagram story, the story that I did, where I asked, what do you see on GIS, right? The ticker GIS. Basically, what I was asking you to look at, let me lock in more profit. Basically, what I was asking you to look at is if you can see that the 12-month was a retrace, right? The 12-month. Let me actually go to it because this is I'm glad this tied in together because I had a feeling an example would happen. So I kind of wanted to share and then do like a thought process after the fact. Okay, so I got stopped out in profit. There you go, 26. There we go. Woohoo, awesome. So, right, on this 12-month, right, I showed you all that it was a retrace, right? Basically, what I wanted you to see is that it was a retrace. What kind of retrace? It was an OTE, right? An optimal trade entry, which is another ICT concept. You'll have to watch the OTE videos to get it, but it's basically like from a certain swing low to a certain swing high, and then normally price retraces into the 62, the 70 and a half, and then the 79%. But normally is the 62 to the 70 and a half. The 79 is kind of reaching, but on high time frame, right, respectively, because the 12-month is high time frame compared to the 1 month, right? So this was a high time frame retrace. But then I wanted you to see that this high time frame retrace from here down and then up was translated, right, to a low time frame buy model, right? Because high time, the concept of price is fractality, and that means price is fractal in nature, so it repeating in multiple terms. Repeating meaning the same type of setup, like a buy model or a sell model or a purge setup or OTE. Those form all the time, every day, on all time frames, on all assets, right? But the other nature of fractality is within itself, right? So one candle shows you only so much, but you go lower with more candles giving you more data, and those can draw a clearer picture, right? Because if you do a 12-month, that's one candle a year. That takes a lot of time to build up data, right? But if you look at the 1 month, there's 12 1-month candles in one year candle, right? So I just wanted to show you that the high time frame retrace, right? Because this is the same OTE from that 12-month, right? And we ran back down into a discount, right? Because this low formed in this buy model was right at that 62 to 70 and a half, right, before moving higher. So I basically just wanted to show you that high time frame retraces normally equal low time frame market maker models, whether it's buy or sell, right? Okay, cool. So how I used that with the dollar was I saw the 1 hour, right? Let me go back up here. I saw the 1 hour potential retrace, right? Or retrace or fill into the gap. But I had a feeling it was going to come down into this gap. And we've seen dollar inverse indices. So lower dollar typically means higher prices on indices, right? So I wanted to see a high time frame retrace respectively, because when I say high time frame, it's always with the 2 time frames that I'm using. So if I'm using an hour and then entering on a 5 minute, the hour is my high time frame and the 5 minute is my low time frame. If it's a 12 month to 1 month, the 12 month is the high time frame and the 1 month is the low time frame. But 1 month to an hour, 1 month is high time frame, hour is low time frame. So it's all respective. Whatever is the larger of the time frames you're using, that's your high time frame. Okay, so high time frame retrace equals low time frame model. So if I wanted to see us retrace into this hourly gap, then lower time frame, like the 15 minute or the 5 minute, I wanted to see us run higher, right? And I have all these green lines for a certain reason. This green line up here was if this hourly was just a retrace, right? Just tap into the gap to expand higher, right? Where we could potentially seek out. These highs was also with the same idea of it just being an hourly retrace before pushing higher, right? But that's not the case, right? Wait, hold on. This is in the way. That's not the case. So we could delete those. So what it really was a low time frame sell model, right? So hourly retrace, I want a lower time frame model. So I went down to like the 5 minute. And then I saw that we shifted structure multiple times, right? Not just one break. We shifted structure multiple times in a 5 minute. So we shifted up here, right? With this swing low, displacement lower, right? This candle here broke this lower displacement, created a gap. What do? We retrace into that gap, into this bearish order block before selling down, right? So we had this low displacement, retrace up. When we retrace up, we created another swing low. That swing low was really broken with displacement. So this was like the thing to me that was like, okay, yeah, this is gonna sell down into these levels I have down here, right? So after that break, we went lower. This candle here, I'm not really gonna go into what that is, but just know this is an area that price will respect, right? You can keep it simple and just have, you could just draw a line at the last swing low if it's a sell model, like if it's bearish, because right now, right, with a sell model, the idea of it is price runs from premium to discount, because buy models and sell models are like almost all the concepts of ICT in one. Like you could use every concept of ICT in these models. You could use purges, you could use OTEs, the same concept of premium to discount, a discount array to a premium array. Although like an example of a premium array is just price running into a premium. Like if you're watching a mentorship, a premium is like an old high or an old low or a gap or an order block or something, right? And then it would basically run from where it started up into a premium, which is into this buy side liquidity that it took out, and then back down into from to where it started. So at this area, right? So after it runs up, you see it's all bullish, right? We up, we retrace, we up, we retrace, we up, we retrace, we up, we retrace. Then we break structure, right? We shift structure here and then we break. It's like, oh God, what's going on? So then we retrace up. So at that point, after we shift structure, every low set as we wind down to this original consolidation here is a target. So low, up, down, low, up, take it. This low, up, take it, right? And it'll always deliver more aggressively on the right side of the model, because the names of the model can be a little confusing, because it's basically read price from left to right, right? So a sell model starts with buying, but it ends with selling. Its end point is selling, so it's a sell model. Like a buy model starts with selling and ends with buying, right? So buy, shifted market structure, sell. Now, seeing this, I'm like, if I'm seeing a sell model in dollar, that means that contrary to what I think I see on the ES, we should have a buy model on the ES, right? So Actually, let me see if I could put the executions on. But this is the framework that I use for the dollar, using the gap as a potential target or bounce area. And then once I saw that we really broke structure here, because this was strong, this is a strong break here. Like this is true displacement. Then I was more comfortable with taking these, especially when it retraced all the way up here. I was like, oh yeah, it's gonna come for this low and this low, and below this consolidation here. Lower, I really don't care because my trade planned out, right? Or it played out, not planned out. Well, it was planned out and it played out. Okay, so let me go to the ES. Let me do like how do you do the execution thing? Trading executions? I think it's like that. Okay, yeah. So actually, right, the entry that I got wasn't even like the best entry, and it wasn't even the entry that I was really looking at for real. The first entry I was looking at was this gap down here. I was looking at this gap because it was right at the 830, right, that little pink line. I'm sorry for all the lines. I'm trying to draw up my phone to see like the different the time intervals, so I could get better with the time part of it. But this fair value gap here and the 830, the best entry I was looking for was like another retest of the 830 within this. But I had my order initially set at this high here, but I was like, let me wait and see, because sometimes the dollar could have a lag in correlation and fake me out, right? But I saw that we, ran into sell side liquidity, and then this solid green line is a 15-minute order block, right? So let me show you. Hold on. One second. I don't want too many things on this screen to like confuse y'all. Yeah, I don't want too many. Let me go to the 15-minute. That's not the 15-minute. Is it the 15-minute? Yeah. So, okay, I gotta clear this again. 1 minute. Yeah, great. So, this is a 15-minute OB, right? And it doesn't look like the order blocks that people are normally used to seeing, right? You're normally used to the last download candle before expansion higher. But that's what this was, right? If you look at it, last down close before expansion higher that took out a high. So I wanted to see price dip into this. Now, when 845 happened and we came right down into it, I wanted to see what price would do at this order block and the 830 open, right? Because we see that price respects these timelines, literally. So I wanted to see what form of accumulation or smart money reversal would happen in this area, right? Because we also dipped into the mean threshold of this OB. We came like right down to the middle of it. That's like right at that candle's open. So we didn't surpass that. So we dipped into it, but we didn't break below the half of it, which is something that you wouldn't want to see if you're really bullish. Like you want OBs to be reactive, like the top half. You don't want the bottom half to be traded to. Most cases. So I saw that, right? And I was like, okay, we're in that order block. So where are we gonna accumulate? So I had to go down time frames to see the break in market structure, or the shift in market structure since it's lower time frame. And that happened here, right? Because we ran some form of sell side liquidity over here, right? We ran that. So we ran opposing liquidity and then shifted market structure. That's normally what you want to see for a break in market structure. One side of liquidity ran and then the shift, not just the shift, because then it's always, is it really shifting or is it just a retrace up to take the liquidity that it didn't sweep, right? So I saw that and then I saw this gap, but I wasn't comfortable with this entry. But again, with these buy or sell models, this lowest entry here, even if you miss it and it's the best entry and it will look pretty screenshotted and all that shit, it doesn't matter because they will give you multiple opportunities to enter if you're willing, right? If it, because it'll distribute higher. Some of these models, sometimes this gap would be the only entry. Like it would be this and then we just rock it straight up and you'll be like, okay, damn, that missed me. But most cases, they take their time. And where to look for entry, right? Most cases, is... Okay, this is going to be a little complicated, but and if you're new and you're like, what the hell is he talking about? The video, the YouTube link that I posted in my story with if you're new and you didn't know the question I asked last night, to watch that, I need you to watch that and take notes, because all that I'm saying is what's all in there, right? It's not new. This is all ICT stuff, right? So basically with this model, it's original consolidation, right? This is some form of consolidation. We ranged here, then we broke below, right? After this break below, the real only retrace was this area. So this area will count as the reaccumulation of the buy model. Reaccumulation simply meaning that either smart money is reaccumulating or starting their buy position for the end goal of the model, because they would know that, yeah, we're down here now, we're probably gonna go a little lower, but we have targets higher, right? Or targets higher than we buy. Like we have a strong conviction in that. So it would be reaccumulation in this area. This area would be the smart money reversal. This is where the model shifts. It shifts from sell side delivery to buy side delivery, and you can see that with the candles, right? See, even look at that. It was wicky and gross at that point, but I'll explain all of that. Okay, this is so dope. Okay, so smart money reversal here, right? This is where we shift delivery, because you see on this left side, after we broke, you can see that there's more bearish candles than there are bullish candles, right? Because my bullish candles are white, my bearish candles are black. So you see there's more bearish delivery here. But once we take this high, look at this side. All bullish delivery. A little gross, but all bullish delivery. Barely any down close candles. And if there is down close candles, they're just used as support to go higher, right? So shift in structure. Now that I missed the initial entry at the smart money reversal, that's not it. You have multiple entries you could have taken, or really just this one that I took. But most cases you'll have multiple entries. The main one after this smart money reversal was this one that I entered, right? At another gap and at an area of reaccumulation, right? With buy or sell models, they normally pair. The sides are normally, again, fractal. They're normally a mirror of each other. So what typically happens on the left side is typically repeated on the right side. What does that mean? Okay, so at an area of consolidation here, and then reaccumulation here, once we distribute, the next level of support, quote unquote, that we have after the break in market structure is right next to this reaccumulation. Right? It's right next to it. Then we deliver higher, right? Then we have a retrace. This is an aggressive retrace, but it's a retrace into what? Into a gap. We haven't broken any intermediate lows yet. Intermediate term lows. Lows that rebalance gaps. Like this low, once we hit this low, this was a higher low. We didn't break that. Then we came up, we set this low. Then this was a higher low. We didn't break that. Then we came up and we set this low, which looks like we broke structure, but we didn't. This is just a retrace because we didn't take out this low before this candle expanded higher and took out the original consolidation up here. We ran above that, right? So I didn't get the initial entry, but at the next stage of distribution, got in and then rode it up to fill the gap. Normally with these, you want to target the original consolidation. That's like the best thing to do or whatever. But once it shifts delivery, right? Once it breaks market structure, then you look on the left side for targets that you're comfortable with. The highs here, any of these gaps here. So I just wanted to see it run up into these gaps. These gaps are mainly my thing because normally it accelerates the strongest to fill that first half. After that, it normally has some retrace like this that normally stops me out before going higher. So I'll just take this aggressive price movement because this is only 3 minutes. I got in here and then I was done here. So basically 4 minutes on that. So yeah, that's how I use that. And as that was going up, right? As that was going up, I was watching the dollar to see if it was making a sell model, which it was, right? We broke structure already all the way up here because this is the 1 minute. And then looking on the 1 minute, I was like, okay, here, which is around the area that I entered, I needed to see it respect market structure, just like the buy model, right? So if the buy model set lows that it wouldn't take, the sell model would set lows that it would take. So it set these lows, retrace up, took them. Set these lows, retrace up, took them. But this retrace up into these candles, this is a bearish order block, right? On a higher time frame, it'll look easier, but 1 minute, this is a 1 minute bearish OB. So I wanted to see price respect the low of this OB, which it did. It had problems closing above, and it broke structure again. It shifted structure again, taking out this low. Then we had this OB, this bearish order block. Then we retrace into that, and then distributed lower, down into these lows and lower. So see? But yeah, okay, this is going for like 20 minutes. So hopefully that was helpful, or you understand what I said. If you don't, that's fine. But it'll be up to you to watch the videos. I'm not really teaching, quote unquote. This is just the thought process and what I look for. But watch the videos, because this is the type of things I know from watching the videos, right? It's not crazy, but it's crazy, right? So that's all I got. Thank you for your time. Bye.